We are now seeing this GTV chart on the Bloomberg just showing how emerging market inflation surprises the index at a 13-year high. How problematic could this get?
Well, I think for emerging markets, inflation has always been a challenge for two reasons. One, obviously, it does create more pressure in the domestic economy. But secondly, perhaps more importantly, so some of the economies such as India, such as Indonesia, historically, a high inflation means that central banks will have to raise interest rates really to fight against potential currency depreciation. Now, right now, I think that need for higher rates to protect currency is a bit lower. But nonetheless, if this inflation bounce continues, I think there could well be some upward pressure in interest rates in Asia.
Does that mean that rotation trade from big tech stocks, from those stretched valuations into perhaps cyclicals will continue?
I do think so. I think not just within Asia or in emerging markets, but I think globally, if you do get, for example, in the US, Treasury yields continue to rise further between now and the next 1 to 2 years, I would expect the rotation into cyclicals will continue, partly because the US economy, the global economy should continue to recover, albeit not in a synchronized way. They should continue to recover. And that means a lot of the laggards of 2020s I think that will continue to perform well. In technology, there are obviously some companies that will deliver return in the long run, but because of the valuations, I think higher rates does pose a bit more pressure on these companies.
Tai, are we talking about a divergent story or, US exceptionalism when it comes to the vaccine rollout, the handling of the pandemic in this post-pandemic stage? Because we're starting to see some of these, countries around Asia that were doing pretty well now fall quite badly behind, of course, Korea, Japan, and obviously the terrible situation in India.
I think so. I think 2021 is going to be a year where the US and arguably the UK could do really well in terms of their recovery as well as a result of their markets. I think for Asia, for countries or markets such as South Korea, such as Japan, which they are struggling with COVID, but at the same time, the recovery story is much more export-driven rather than domestically driven. Of course, in Southeast Asia, we've been hoping for the economy to recover, but I think that's going to be a little bit delayed because of, as you rightly said, the vaccination progress is quite slow, and they're having another round of outbreak, for example, in the Philippines as well as in Malaysia. So from that perspective, I would argue that the US and perhaps Europe later this year are likely to be the preferred markets. ASEAN, Asia, especially with the domestic Thai, that could well be the 2022 story.
So we see the likes of Australia in the budget really trying to juice the economy to get the unemployment rate down low. Are there still structural issues with regional, in fact, global labour markets? So do you expect that inflation story to include a meaningful return to wage growth?
Well, I think the US is a good example where well-intended policy is creating some disconnects in the labor market. So we do have the extra $300 per week in terms of supplementary support for the unemployed in the US that will run until September. And to some extent, I think that is creating the disconnect in the labor markets where workers, because companies or businesses are not offering high enough wages, they're slow to return to the labor market. And that's why you have this rather peculiar situation where there are lots of people unemployed, but also companies are struggling to find people. Obviously, that can be resolved in two ways. Either you let that supplementary support run out in September, and therefore people have to go back and look for jobs, or for companies to raise wages in order to attract more people. So I think from that perspective, there are some policies that are creating some temporary disconnects. But I do think that as these policies start to run out, those distortions could well be addressed. For example, if you look at South Korea, even in Hong Kong, some of the job markets are slowly coming back. So I think from that perspective, these distortions or disconnects, I do see them as only temporary.